Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, subscribe, share, get that algorithm to work. My guest today is Dušan Stojanović, who is managing partner at True Global Ventures, a distributed venture capital business that invests a lot in artificial intelligence, Web3, and other cutting-edge technologies. I spoke with Dušan about his vision for why the new wave of AI and generative AI will create the bridge that will mainstream the Web3 economy. Dušan Stojanović, welcome to DigFin VOX.
Thank you.
Looking forward to this conversation. You have been around in venture investing in all kinds of areas, including fintech and Web3 for quite a while. You are, I guess, the ringleader in chief at Global Ventures. Talk us a little bit just about the way that your organization is structured, what makes it a little bit different from other traditional VCs at True Global Ventures, and what is the, then we'll get into some of the themes that you guys are focusing on for 2023.
Yes, so I think one thing that is very, very different from us compared to other VCs is that we have a huge skin in the game when we actually do the investments. So originally TGV 1, 2, and 3 was really only partnership money, and we had no LPs. And then in TGV 4 plus, as we called it, and the plus was standing for, including LPs, we put in about $25 million of our own money, and us is about 30 partners who are responsible for the investments. And about 90 came from LPs, so 25 million out of 113. And in the opportunity fund, the last fund that we basically raised last year, we actually increased that to 62.3 million coming from the 13 GPs, and that's 62.3 of the total fund size of 146. So it's about 40% commitment. So okay. It's a lot of skin in the game there. And that also kind of explains why the organization works. We have 30 partners who are actively running TGV4 base and 13 that are running the opportunity fund. If you have on an average investment that you put in as a GP of 4 million, you are, really focused on that those investments will succeed.
How do you, when you got so many GPs involved around the world with a variety of expertise, how do you come up with a focus and say, okay, well, amongst all these different people, we think there's a couple of themes that are going to stand out? It's sort of, do you think of it that way? Are there like investment themes and stories, or is it just maybe something arises from the muck of the different decisions you make, but it's not a causation thing. It's just circumstance.
No, it is actually. You're right. We don't do our investment fees every year. Some other people might do it. We did it in 2018, and we did it now. And then actually, yes, we do really, really profoundly, look at external data, what the partners believe in, and come up with a thesis. So we did come up with a thesis in 2018, which was actually shared among all our partners at the time. So it was a fairly kind of decentralized, distributed process. And yeah, some of that we kind of nailed down in 2018. We believed, that the blockchain gaming, entertainment, the metaverse would become big. And we invested in the crash of blockchain in 2019, and we were lucky to invest into companies like Animoca and Sandbox at the time. Other themes like infrastructure and financial services that we believed in worked out okay. But one thing that didn't work out at all was actually we believed that there would be an interface between blockchain and artificial intelligence, and that would be a theme. That didn't work out at all in 2018, 19, 20. So we had to close down that vertical because we couldn't see any kind of traction or any kind of companies doing that seriously.
Right. So on the AI and blockchain thing, I think that's something that you're revisiting now. Why did that not pan out from in the past 5 years?
Well, I think it was a little bit, honestly, two kind of buzzwords, two kind of cool technologies that separately are probably pretty good, but together kind of didn't make sense. I think one of the reasons was that AI itself didn't really pick up at the time when we had this prediction. We have been an AI investor since 2011, and frankly speaking, our AI investments have taken way longer to maturize and basically grow compared to our Web3 investments, where we really only started in 2016. So I think we were a little bit too early on the AI piece in itself. And actually, I think we really only see AI really from a truly commercial consumer point of view, really picking up probably now with, OpenAI and ChatGPT, and also Google doing things with Bard and others, where we are seeing investments that started when it comes to OpenAI in 2015, only now really generating revenues. We had similar experience on our pure AI investments, and that is actually really only picking up now in the last, I would say, 2 years. So last year we started, beginning of last year, we started to revisit actually again our AI strategies. And yes, we believe that that's one mega trend. Now, saying that right now in, what is it, 6th of April, it's kind of showing the obvious. Everybody talks about generative AI, right? We did actually come up in January 11th that we believe not only that generative AI will become big, but also other solutions within generative AI. So for us, this is, a huge transformational shift again that we believe is maybe going a little bit too fast, honestly, as well. I think we've seen, letters from Elon Musk and Steve Wozniak coming out that things are maybe going too fast. But we do believe in terms of, administrative tasks, in terms of legal contracts, there we actually really believe that it is happening. And we are actually implementing it not only internally within our VC, True Global Ventures, but also across all our portfolio companies. And we are looking at 2 companies that are actually in that space to potentially also invest into them.
What is the opportunity for VC in this area? Because when I look at the huge numbers going into acquiring companies like OpenAI by Microsoft and so on, and the amounts that are going, the amounts of data, the raw source of data that you require to make these generative AIs work. And then the fact that we've got, Microsoft and Google and these scale companies that are kind of now owning a lot of these things and moving these ahead with their, whether it's chatbots or video or whatever. What is the scope for small startups to bring innovation to this space, and therefore for VCs to fund that, versus maybe going back to the days of Thomas Edison style labs or Bell Labs inventing the transistor, where the capabilities were in these giant corporations?
So yeah, I mean, you have a fair point that suddenly Microsoft has ended up being the coolest company in the world suddenly by forging this partnership with OpenAI.
Yeah, except every time I have to go back on the Teams, but that's another story.
Yeah. But so I think, and we have a race, obviously, between the large companies, especially those that have the processing power, right? The cloud power. Yeah. So I think that's one of the reasons that Microsoft and Google and even Amazon and Baidu and others, or Oracle, IBM, are in the space, Alibaba, Tencent, and so on. The big cloud providers, they have the processing power to do this. But I would say from a startup point of view, what we are looking at is anyone who has really a proprietary data set. So I would say if you have a proprietary data set that is actually pretty good in terms of predictable AI, and with the processing power out there, you can really make sure that you can process all the models that you have to do to actually get it better and better, then adding on top of that generative AI becomes a very, very strong model. So you don't only kind of say this will happen or that will happen, but you also articulate it in terms of text or in terms of images in the right way as well. Okay. So that we are definitely seeing.
Yeah, so Dušan, play that out for me in terms of real world applications. If not today, then maybe in the next, couple of years.
No, actually, next time frame. Yeah, actually, this what I'm talking about now. Actually, we see right now. Actually, it's it's a little bit kind of talking about some of our old companies that finally are kicking off this. We have one company which is doing, basically AI only for legal. Mm-hmm. Definitely, it's picking up because I think everybody sees that the way legal is moving today is that a lot of the kind of traditional policies and work that has been done and reviewing documents can be, I would almost say, completely replaced by OpenAI, but can be way done much quicker and faster. And maybe the lawyers in the future will be more focused on the copyright issues that OpenAI brings in. So I think there is a shift in the legal profession from doing these kind of repetitive tasks to maybe move into the copyright issues, which actually OpenAI asks for is challenging.
Right. So the
Definitely.
editing issues, making sure that what you're getting is true or accurate, and that you can use that information.
Exactly. And then moving the legal profession to maybe looking more on the copyright and maybe the governance even of AI, right? Open AI and other solutions. So we see it in legal, yeah, and we have portfolio companies there, and yeah, we see them growing tremendously. We have another one, just to be clear, which is B2B sales. B2B sales, you can predict, you know, if you have proprietary data sets from the client, like CRM solutions, and then you're looking also for public data. Yeah, we have a solution there. We're adding the generative AI. That company, for instance, is growing right now with 300% from a low level. So, but again, we do see startups that can benefit from that. We also see corporates, other corporates than Microsoft and Google that can profit from it. Bloomberg just announced what they are doing. They have obviously enormous proprietary data sets. So I think it's, you know, it's an interesting, I think there is a premium for being niched. That's what I'm trying to say. If you're in content marketing, if you're in automating in terms of B2B prospecting sales, if you're niched into legal, I think there is a premium for being niched. And why? Because actually you can sell your services not only to the latest Web3 companies or Web2 companies. This is revolutionary, definitely for the non-tech world. And this is so much different from any other tech revolution or evolution we've had, that the non-tech world is hugely interested in this. Real estate, corporate services, you name it, they are interested in this area.
So anything that's got data, not necessarily a technology company, but if you've got your own data that you've got, you know, proprietorship over or governance over, then you can start to do new things with this data using these generative AIs or other types of AIs and combining them that you could not do before.
Exactly.
What are the issues in finance? So in finance, when I talk to people about data and data governance, you can get into the weeds pretty quickly. Data sovereignty, cybersecurity, and just general laws around not, the controls around who can do what with whose data, privacy and protection. So what are the issues that your VCs are beginning to stumble into?
Well, I think you're talking about
your portfolio
especially
company,
for generative AI and predictable AI. So yes, so we when it comes to generative AI, yes, as you know, OpenAI itself is only run onto data until September 2021. So any kind of prediction of Black Swan events and you name it is impossible. So one shouldn't really rely a lot on that. So if your question is within financial services, it's the same answer, like I said before, in terms of legal administration. It might be on compliance. You know, you're writing loads of compliance policies all the time. Those we have been testing that both internally at TGV as well in our portfolio companies that have heavy compliance because they're regulated. Yes, you can actually get a quicker start on your compliance policies by using generative AI. There is so much data out there. Obviously, you need to double check everything, but you get a head start. So again, I think it's more on the KYC, on the AML, on the compliance. That's the piece where I think it has an impact on financial services, as opposed to which stock should I pick tomorrow.
Right. Yes. I've tried that on ChatGPT. I asked it to recommend me, give me Coca-Cola, buy, sell, or hold, and it wasn't very useful. I would have lost money if I had relied on ChatGPT to tell me how to manage my money.
Yeah, now this might change, right? Because it is an evolution, right? And the models are getting trained, right?
Yeah.
So we had 3.5 in November. We had 4.0 in just a couple of weeks ago. And when we compare the differences between 3.5 and 4, it's definitely better. I asked, what's the impact of Silicon Valley going bust? And, the answer on 3.5 and 4 was definitely much better and much broader, but it's still not, what you want, to basically.
Right. It's not going to be, it's not going to tell you things that you essentially don't already know.
I would agree on that. Now, things are evolving, right? So the question is, for how long will the model is evolving. When the next version comes, maybe with data that is up to date, well, then maybe we get better predictability.
Yeah. With data and Web3, so the high concept of Web3, although it still seems to remain pretty much a high concept, is that the contributors to whether it's a project or people making something in the digital creative economy will be empowered to have control over, I guess, their copyright of whatever it is that they're creating or doing, and be able to control and over consent of their data and their copyright. How does that? Maybe I think we'll get into this a little bit, but I'd be curious to enter into this topic by looking at if ChatGPT and these other AI businesses are so attractive to companies that have a proprietary data set. I guess the bigger your data set, the more attractive and the more efficient that becomes for you. And yet with Web3, it's like we want to take that data and disaggregate it and decentralize it. So how do we then, or is there a movement then to find ways to make all of that data somehow something you can interrogate and use so that you get the benefits of a large data set without disrupting somebody's consent framework if we do have a more decentralized, disaggregated ownership and control over data?
Yeah, so I might answer your question directly or not, but I would like to be a little, as opposed to be theoretical and futuristic, to kind of give you maybe a concrete example in that area. So we have one company which is in the metaverse, one of the players in the metaverse called Sandbox, and that particular company has, I think, sold out about 70% of all the land plots in the metaverse. A huge amount of that is being built by 400 brands, and there are basically 230 independent creative agencies or production agencies helping the big brands to do that. Now, where does the generative AI concept come into that? I think it's in two areas. Number one, when you have generative AI, it's very similar, like explained on the legal and administration. If you want to build something in the virtual world, you can start to get some ideas with generative AI. You can start to get some, like an architecture, even in the real world, can get some ideas what to build his house, like first ideas. Nothing that you can say this is exactly how it's going to be, but first ideas. Similarly, you can do that in the virtual world. If you want to build a virtual museum, you can get first ideas what that could look like as an experience. So basically, it helps you. It's the same kind of productivity tool. It helps you to faster and quicker get into ideas how to build what you want to build in the metaverse. So either it can be the IKEA self-made model that these big brands have, capacity internally within the corporates and can do it themselves now, thanks to generative AI tools, and there are quite a few suppliers in that area. Or the creative agency, the production agencies that are helping the big brands, they will be using the latest tools in order for them to come up with better, newer experience and faster and cheaper. So we see this as an accelerator for actually companies like Sandbox and Metaverse, but also others metaverses as well, of course, right? But that's really where we see it as a huge productivity gain, basically, and an accelerator of actually distributing the metaverse and making it more concrete.
Okay, so I understand the idea that, okay, you can go, I mean, we've seen it on Instagram and places where you generate these sort of fake, but sort of attractive looking landscapes, architectures, interiors, and so on. And, so that seems like a pretty reasonable leap that, just take that as a guide, because I guess in the metaverse, you can make it look however you want it to look, I assume. But I'm still trying to grasp if companies like Microsoft and Oracle and Baidu are interested in this at doing large scale stuff, or if any company with enough of its proprietary data can use these tools to interrogate that data and get something out of it. So non-tech companies, what does that imply for a new model where if this data is meant to be secure behind Web3 protocols, so that small businesses, individuals, whomever, now have a lot more control. So you don't have a Facebook or an Amazon or a WeChat that can basically instantly do whatever it wants because it's got all the T and C's, it's got everybody's data, and it can just sort of throw its weight around. So where will be the balance in terms of the value creation using these things if you don't have access anymore in a Web3 context to such massive amounts of data based on sort of Web2 type of business models?
Yeah, I think Web3 companies definitely have proprietary data sets, and they can even digitalize and make ownership of it in terms of the NFTs and other ways of monetizing the proprietary data sets. So I don't see that being as a huge issue in the more distributed, decentralized models. It's basically how you make the ownership of the data set, but the data set is there definitely. So it's there, and then it's really to make sure that the community who has built up the metaverses, for instance, if it's decentralized on Sandbox, are also having part of that ownership, and then it becomes much stronger than any centralized system. So it's still the same philosophy, centralizations versus decentralization. If you have a strong community which has a strong incentive in terms of ownership and data, yes, you are pretty strong in terms of very strong centralized powers. Now, for me, it's really about figuring out the processing power that those companies do provide, though, makes it attractive to basically get better predictability in those data sets. And I think that's where it's a win-win game. So now, where are we going to go? If it goes out of control and you don't have any governments around it, then it starts to become scary, right? I do think that decentralized models are better from that point of view, because you have the government's issue. Because what I'm seeing is that this is going so fast that regulation will come into place. Because if Microsoft, if Azure becomes too strong in terms, or Google, in terms of owning all the data in the world, regulations will come into place, exactly like we had in decentralized exchanges when it comes to FTX and Binance. So, and what we saw then when FTX and Binance collapsed, well, Bitcoin went up, right? So, I don't want to be predictable. We're talking about here hypothesis what's going to happen in 2, 3, 4 years. I don't think this is in 2023, but I do see that a decentralized structure will always be a soft landing in terms of governance and where the value is. And that so to kind of summarize, in the short term, yes, I think Microsoft and Google are winners of this, big winners, and others that have a decentralized structure may not be winners. But at some stage, when you see that centralized powers is becoming too strong, and you have the same issues that you had with FTX and Binance and so on, then the decentralized will come back again. So short term, I think Microsoft is a winner. Long term, I think the decentralized structures are winners.
Okay, yeah, and just I guess Binance hasn't actually collapsed. Just to put that in context, FTX did, but I think Binance may have its issues, but it's not.
Yeah, sorry about that. It has definitely not collapsed. Yeah.
Yes. Okay. What's happening with I guess with governance of these virtual spaces or these large Web3 embryonic businesses? I mean, can you say with confidence that that there are DAOs, decentralized autonomous organizations, or other governance forms that are working the way that they're supposed to work, or that they're envisaged?
Yes, I mean, definitely. Decentralized is an example of a completely decentralized metaverse. Now, if it's working or not working, there are a lot of journalists writing this and that, but clearly it's out there and working. We saw another example, which is from our portfolio, which is Animoca has invested into something called Otherdeed, which actually has worked out extremely well during Q1 compared to Q4. And it's definitely also partly decentralized in terms of what kind of rights each holder has. So yes, I do think that maybe we don't have fully decentralized models like Bitcoin would be in finance, but we definitely have partly decentralized models already happening.
But when it comes to like Decentraland or these kinds of places, I mean, essentially it's still the main stakeholders behind the foundation that tend to call the shots, as opposed to the DAO or the people that are building a bank or a cosmetics company, whoever is building a site there.
Yeah, I don't want to comment exactly how the DAO and Decentralized works, because I don't know the details. If it is really some people behind it that are calling the shots, I think the future will tell on that. But what I'm trying to say is, the more you involve the community, the better. Maybe there are some that are making more decisions than others. I don't want to comment on that, but it's definitely better than having a traditional centralized structure, the way we know it from Web 2. And I think that might be the reason for where some large corporates who kind of came into the hype very quickly in terms of metaverse are already, if I may say so, abandoning it, because they had a very centralized approach from the very beginning. And that actually does mean there is a little bit less of competition, because they are maybe not as ambitious as they were before. And at the end of the day, there are only so many metaverses that we need out there in terms of the future. So I think what we have seen in the metaverse is a little bit similar, like in finance, that some of the large centralized actors have had either collapsed or actually abandoned partly. And actually the more decentralized are benefiting. Now, if they're completely decentralized, to your point, it might not be true, but they are definitely more decentralized than the kind of traditional Web 2 companies.
Dušan, we're coming close to our time. I think we could spend quite a long time discussing this. We've really only scratched the surface. So maybe we'll come back. I don't want to overtax you, but maybe just to wrap up, we won't have time to really delve into this properly, but when it comes to that combination of Web3 and AI, just a couple of more thoughts from you.
I think for us, I think it has kind of a huge impact, the generative AI space in general, not, like I said, not only for Web3, right? So we do believe that's one area which is very interesting. And yes, that is profoundly interesting. What I would say is that for us, the most interesting piece for us is actually maybe how we operate as a VC. Because what you've seen is that probably our own companies, our own investment firms do not use a lot of technology. So I think one thing that I believe in a lot is, we predicted this 5 years ago, but I think it's going to happen actually. Now the market is more mature for it. On one hand, that a lot of the processes within the VCs are using the latest technology. So being, more doing deal sourcing through AI technology, especially when it comes to Series B and upwards, you can definitely use way more technology. When you do your content marketing, that you use generative AI. When you do your prospecting in terms of which leads you want to invest in, that you use basically the latest tools, and that you have sales objections using generative AI. That every single process that you have in the VC internally is more used with technology in terms of AI and generative AI. When it comes to the Web3 concept, I do believe that VCs will need to start to get liquidity, internal liquidity, very much the way it's done in Web3. So because a lot of LPs want to get in and out quicker than 10 years, and Web3 is a solution for that. So for us, what is the most interesting part, to add on the whole discussion on the interface between Web3 and AI, is actually our own companies and investment firms, which have not been. We are a non-tech company,
right?
And actually, what I said from the very beginning is, I think that the generative AI impact will be even bigger on non-tech than on Web3. So I think it's a wake-up signal for the whole VC industry. How the VC industry itself is going to adapt these technologies, as opposed to just looking for the technologies or asking the portfolio companies to implement them.
And that would be very interesting, because that really hasn't happened. I mean, other than, okay, we use email and I guess, WhatsApp or something. But other than that, VC is still often just run kind of like a private law firm with a bunch of guys around a table, usually guys, who make these decisions. Of course, they have data. Some of them are more data-led than others, but they're not really using the technologies that they themselves have been investing in. So that would be a big change. What does that mean for VCs? We hear a lot about the need for venture to refocus on hard tech, or at least that the opportunities in the next decade or so will probably be more to be found in hard tech than in the kind of internet companies that boomed in the past 20 years, aided by the low interest rate environment. Now we have a new environment. Will you be able to also use these tools either just to be more efficient so you can focus more on more difficult, more challenging kind of investment theses and company due diligence, or can the AI actually help you more directly with some of that?
Yes, I do think so. I do think that it can help in due diligence. I do think that sometimes you're just looking for red flags when you invest. I do think that it can be a tremendous accelerator in terms of due diligence and deal sourcing as well. Now, I do want to mention one last thing, if you permit me. One thing we discussed was centralization and decentralization, right? So we talk about the hypothesis, a lot of what can happen in the metaverse, which we really don't know, right? So it's a little bit futuristic. But one thing that we have seen, which is for me amazing, our companies, and we did this recent investment in a company called Ledger. What I found extremely interesting there were when they started to do some data points on how hardware revenues, their own hardware revenues, which is basically very, very tangible and concrete because you have the hardware and you plug it in order to get access to your tokens, right? How that is correlated to the ETF gold price. And basically what they did was they looked in the past year for every single crisis when we had the Terra Luna crash, which was in May 22, then hardware revenues for Ledger went up, but so did also gold price. So the correlation was pretty high. Same thing happened when FTX collapsed in November. There was a 90% correlation between hardware revenues from Ledger and ETF gold. And in the last collapse here with the 4 American banks and what happened with Credit Suisse and UBS, the correlation was 81%. So for me, all this is way more interesting when you see data. I mean, that's why I'm kind of bringing it up, because you can talk about correlation, this and anti-cyclic and resilient, and it's all kind of words that are somehow qualitative words, but you can't quantify it. And when you show this as a data point, then it's pretty clear. And then you can actually make decisions much quicker. When we saw those data points, for us, it was a no-brainer to actually invest into Ledger. Because you felt that the data was supporting their business model, or because you felt that the insights that their data work is getting will help you, you want access to their insights to help you with other decisions? Both. But to start with, just that the data those data points basically showed me that, it's correlated to something else as well, and not just that their business model is working. Because what you are looking for when you invest into what is still a bear market, you're looking for anti-cyclical businesses, you're looking for resilient businesses. Now, a lot of people claim that they are that, but if you can start to correlate it and show it with data points, then you have something that is hardcore that you actually, can make a quicker decision on. So I'm trying to say that's the data points that makes a VC invest quicker. And if the companies can show those kind of data points, it makes them also show a little bit better how their business model works, which actually doesn't make it only more attractive to investors, but also to their consumers. I think this is a great place to leave it, Dušan. That's super interesting. I really enjoyed chatting with you and getting an insight. I think I learned a little bit more, not just about what you see going on in Web3 and AI, but also how that's going to impact the VC and the investing industry and other industries as well. So thank you so much for joining me on DigFin VOX. Thank you very much for having me.